What's up, everybody? Welcome back to the channel. The stock market is crashing. We'll go ahead and look at that today. Also, the job market report came out this morning. That looks a little worse than expected. I don't know if I personally think it's a little overreaction how much people are selling out of the stock market, but people are pricing in more Fed rate hikes. So anyway, we'll look at the public account real quick. I haven't pulled that up in a while. I bought something today, and we will also look at a couple individual stocks, and I'll go over kind of my mentality for a stock market like this. So let's go ahead and get into it, guys. All right, so we're going to start off here with the Dow Jones Industrial Average. Like I always say, it's the 30 biggest companies. It's like the big blue chip companies. That today dropped 2.55%. We got the S&P is down 3.22%. And we got the NASDAQ. We're going to hang on the NASDAQ here for a second. NASDAQ is down over 4% today. So if you shorted the NASDAQ, you'd be sitting pretty well, especially if you did like a triple leverage play or something like that. You'd make, what, 4, 8, 12% on that. Anyway, let's go ahead and look at the 5-day, though. This is what I wanted to look at here. So for the week, we're down just 0.13. So all those awesome gains we had Monday, Tuesday, gone. So basically, it was a sideways move today, or this week. And anyway, we'll go ahead and look at the Russell here. The Russell also down 2.87. Surprisingly for me, the VIX is only up 2.88%. So 31.4. I would have thought the NASDAQ dropping 4% today, the VIX would be, I don't know, 34, 35. Seems like a capitulation day to me. But anyway, let's go ahead and look at a couple things that might be causing the market to go down. So the first thing here I want to talk about, the September job gains affirm the Fed has a long way to go in inflation fight. So basically there was 263,000 more jobs compared to what the expected rate was going to be 255,000. So 8,000 more jobs. So the average hourly earnings rose 5% on a year-over-year basis, which is actually down over 5 from 5, it was 5.2 last month, so down to 5% this month. That's year over year. The hourly earnings did raise 0.3% on a monthly basis, which was the same as August. So that's actually stayed the same, and that was on expectations. So I know the biggest question is there's a strong job report. Why is the stock market going down? It doesn't make any sense. Well, I do agree that we do want a strong job market. However, the problem is there's all these studies out that if people jump from job to job to job, they actually end up making more money than if they stay in one job. If you stay in one job, you'll get like your 2% raise every year or whatever your job does. And if you were to jump jobs, and I actually did this as a nurse, you change jobs every so often. Every time you get a different job, you actually make a couple more dollars an hour or whatever. So that's part of this. They're trying to fight the wage increase inflation. So that's something to think about too. So a quote here, anyone looking for a reprieve that might give the Fed the green light to start telegraph a pivot did not get it from this report, said Liz Ann Saunders. She's the chief investment strategist for Charles Schwab. Maybe the light got a little greener that they can step back from 2 more 0.75 percentage point increases and only do 1 more. So basically the market went down today. The job market was good. The job report was, quote, good, which was bad for the stock market. Basically, the Fed is going to have to tighten more. That's like the reason of why the stock market went down. They think the Fed's going to have to increase rate hikes for longer. So therefore, that's bad for the stock market. I think another reason the stock market sold off today was AMD's earnings yesterday. They missed their revenue by $1.1 billion. They were supposed to hit, I think, like $6.7 billion, but they hit 5.5. So that also with the job thing, it's like just like a double whammy. They reported after the bell yesterday. So after the stock market closed, they said that they were going to be lower on expectations for their revenue. So anyway, you have 2 bad news together. There's a huge sell-off. Other random quick news, while I don't do anything with crypto, there was a $570 million worth of Binance token stolen in another major crypto hack. So man, that's scary if you have money in some of these accounts or whatever, and now you just lost a bunch of money, or the company is not secure. All right, so real fast, we'll look at the public account that I've made. I started this a couple weeks ago when I started this channel. So also, if you're new to this channel, my name is Jay. I love talking about finances. I have my personal finance journey up here. That is why I started this channel. I literally love talking about finances, stock market, personal finances, saving, investing, all those types of things. So if you're with me, please go ahead and subscribe to the channel. I'd like to start a little community here of like-minded people. Go ahead and smash the like button and leave a comment down below. So these are a couple quick positions I've got started in our public account. So I'll go over what they are real fast. So we have Meta, everybody knows that's Facebook, Instagram, WhatsApp, possible play in the metaverse if that ends up becoming a thing. So we have one share of that. QQQM, which is actually a NASDAQ ETF. So you hold the top companies in the NASDAQ there. So I have one share of that. That's actually what I bought today after the market dropped, after the NASDAQ specifically dropped 4%. We have VYM, which is the Vanguard version of a high dividend yield account, or high dividend yield ETF, I should say. And we have SPLG, which is my personal, what I use for the S&P 500. Just remember, I'm not a financial advisor. I'm not telling you guys to buy these shares or buy these stocks or ETFs. This is just what I personally do. So anyway, I'll make another video sometime and kind of go more in depth on what these ETFs are. But this is just like a sample of something you could do. So that being shown, I showed you guys that I bought a NASDAQ ETF here, QQQM. That correlates with my strategy for this market. I understand every time you spend money on the market, you like this whole year, you bought something, you're like, oh, a good deal, a good deal, a good deal. Keeps going down and down and down. So we'll make it easy. Let's say you put $1,000 in over the year. Now it's worth $800 or $700. It's very hard, I understand. I personally, at some point, this market's going to turn around, and I'm going to be extremely happy that I had the discipline to keep doing this. So the dollar cost averaging, that is like every Monday you put in X amount of money. That'll be based on your own finance goals. You guys can do your own research on that. Anyway, I have other videos based on how to figure out how much you want to put in, based on like investment calculators, that type of thing, how much money you need for retirement. So every week I basically go in and I buy whatever type of share that I want to do, like whatever stock, whatever ETF, whatever mutual fund, whatever I'm looking at to invest in, I'll buy that every week. So the idea is if you think of the stock market just going up like this, you're just buying when it's going up and going down the whole time. So you take the average of the market. So therefore, if the market ends up being up in 10 years from now, you're up with it, and you didn't have to put all this crazy thought into, oh, I'm buying low, selling high, because let's be honest, it's pretty impossible to do. A year like this has shown that. Every time I'm like, man, maybe I did actually buy something towards the bottom, market goes down more. So that is definitely not something most people can do. Probably, if someone's telling you they can, then I probably wouldn't trust them. So my personal plan, I'm going to keep dollar cost averaging into this thing. At some point, this will all turn around and the market will go back up. And if it doesn't, if it goes down to zero, then money isn't worth anything anyway. So my personal plan, just stay in the market, keep putting money in. Go based on history that I think the stock market will go up 8 to 12% on average per year. So if we're down like 30% year over year, then that just means next year we're going to be up X, whatever the percentage to make up that 10%. So anyway, just keep hanging there, guys. And like I said, leave a comment down below what you're doing in the stock market, if you think I'm crazy or if you think I'm doing the right thing. Anyway, let's go ahead and put a picture of Pongo up real fast. So here's Pongo the other night at sunset. This honestly is why I got into investing in the first place. My why of investing was for freedom and be able to make my own schedule. So I used to work night shift in the hospital, and now instead of driving to the hospital to go work, I can take my dog, we go hiking, we go to sunset, or I actually am a full-time portrait photographer on the beach. So a lot of times I'm actually doing portraits of people and their families, weddings, that type of thing at the beach. I hope you guys have enjoyed today's video. Please smash the like button, subscribe, join the community, and go ahead and leave a comment down below what you guys think about this market, and I'll talk to you guys later.